People will say, how can you build a tree? You can build a money tree just like the normal way you build a tree behind your house. And anytime you need fruit, you just go from that tree and pluck it out. It's the same thing when we talk about money trees. We want to know, how do I build a money tree that will be giving me income, or that will be giving me something? Is it monthly? Is it quarterly? Is it yearly? They say when you want to build a tree, if you want the tree to stay long, the root must be very strong and it will take time. Like people always talk about the Chinese bamboo tree. They always say that it's the smallest tree in the forest, but at the end of the day, it becomes the biggest tree in the forest. Why? For the first 3, 4, 5 years, you don't seem to be anything is happening in that tree. But one morning, the tree begins to grow and becomes the tallest and the biggest tree in the village. When you ask somebody that not know, we said, oh, that tree just grew overnight. No, it took time. Remember, for 5 years, you are watering that tree. For some people will just see it and say, wow, he just became a millionaire. Oh, he just made it. No, he must have been building a tree. And once you build a tree like that the root is strong, it lasts longer than when you suddenly find yourself in wealth. Now, let me tell you about the financial trees. I call them financial mountains. Number one, you can build investment. We call investment mountains. How do you do that? You start just by investing, and this investing could be you invest in shares, you invest in treasury bill, you invest in fixed income. It's just investment. All you are looking for is good investment to invest in, and this investment could depend. If you are building an investment that you are doing through the stock market, you now know that the company will not declare dividend for you every month, but it will give you dividend every year. But again, the other thing about it is that with the stock market, you could have what you call dividends, which comes up at the year end of the company, or you have capital appreciation. Capital appreciation is that I bought this share at 1 naira, now the share is 2 naira, so I've earned capital appreciation. That is an investment. Treasury bill is just an investment, like a 90 days investment. Could be 180 days, could be 360 days. And what do? You have a fixed amount. Sometimes you're even paid ahead. If they say they are going to give you 10%, they will pay you 10% ahead of the time that the investment will mature. So that is another investment vehicle. There's another one we call money market. Money market and money market instrument could come in form of bonds that you are going to hold for some time. It could be that government want to borrow money from you to do a project, like what is happening in Nigeria. So sometimes government borrow money from us. They say 10 years bond, 6 years bond, 3 years bond, 1 year bond. Those are fixed. They say they pay 14%, 15%. Those are fixed investment. So investment mountain has to do with the type of investment that is commensurate with your return. So you want to build a tree behind you. Do you want your tree in terms of investment to be in the area of the stock market? Then you need to think long term. Do you want it to be in the area of the fixed income? That means you are not a risk taker, so you do the fixed income. You want it also just to take minimal risk, you do the bond market. So the fixed income is fixed, but the stock market is up and down and could be volatile, but it has been proven to be one of the fastest vehicle to build your financial independence. Then we come upon the real estate mountain, which is where you buy properties. This is where you buy houses. This is where you buy land. But in real estate, they will tell you location, location, location is the key. But I need to give it a word of caution. Real estate is not for the faint-hearted. Real estate is not for people that do not have the knowledge, because real estate investment involves a lot of capital investment. It comes with a lot of risks, especially when you are going to be invest like that in a state like Lagos State, whereby you need to get your documentation, you need to deal with omonile, you need to deal with a lot of things that are not directly under your control that you need to do. So when you want to build your investment in the real estate space, you must do a lot of due diligence to be sure you are the only one buying that house to be sure you are the only one owning that land. You see, we've had issues where 1, 3, 4, 5 people are owning one plot, or 1, 2, 3 people are owning one flat. So definitely in real estate, you need to do your due diligence, and it's all about location. Location can be present, location can be future. When you talk about present location, you think about location that will give you income, instant income. Then you think of Ikoyi, you think of Lekki, you think of some part on the mainland, GRA. Those areas can give you instant income when you are investing. But when you talk about futuristic income, then you begin to look at outside of Lagos. Are you looking at the Lekki Epe? Are you looking? That is the future. So you begin to look at Ajah area, the Ajah, the Ogombos. There are a lot of places in that place that are not yet built up areas. So when you're thinking about future, then you begin to think about that. Then you need to think long term. And one thing I want you to know is that some people make the mistake and say, oh, I'm building my real estate so that when I'm of old age, I will be able to make money from it, or I'll be able to sell it. It's a good thing, but know that it's not always easy to sell your land, no matter how lucrative the place is, no matter how nice the location is. You must stay a while before you get a buyer to pay you the certain price that you want. So real estate investment is good, but you must always know that it comes with a lot of risks. Know how to go about it. A lot of people have gotten their hands burned because they buy land, there's no proper documentation, they did not do due diligence. So I always advise, try to get a good real estate merchant, and also try to investigate your real estate merchant. Nobody just want to say, oh, I'm into real estate, and you just want to go and invest with them. Try to do your due diligence, because real estate is very capital intensive, and sometimes when you lost an opportunity in a particular place, you will not be able to recover again to get a property on that space. That's why you need to do your due diligence in the area of real estate. So real estate is a good investment. But again, like I said, it comes with its own risks, and those risks can be very, very tough. So study it very well, look at your risk level, look at what you are looking at, and then before you begin to you go into real estate. And real estate, you also have the ones that you build for renters. Renters comes every month in some countries, but in Nigeria it's yearly. Every year you receive rent. That is another good investment. But that should not be. So a lot of people have a baba that, oh, I built so much houses, and so those are the houses that I want to be using to enjoy my retirement. Unfortunately, you put a tenant there and things are not working well, he's not able to pay, so it becomes a challenge. So those are part of the challenges that come with real estate. Real estate is not always a very liquid investment. When I mean liquid is that you cannot get it at us when you want it. It's not like the stock market or the fixed income space that have a certain time you receive a certain amount. With real estate, you have to be patient. You have to wait. I had a story about a friend of mine was just telling me recently of a woman that owns a property in a highbrow area in Lagos, and she collected a loan from one of the commercial banks for about almost 200 million naira. And she said, wow, now she collected that loan based on her goodwill, based on her investment, based on where she's living. She used a landed property document to get that loan, so they gave it to her. Now she took that loan for 6 months, and she was now time for her to pay. But guess what? She wants to sell her land, or she wants to rent out her land, or she wants to lease her land for her to raise the money to pay the commercial bank. And she has short time. That they can't meet up, because the time frame to get the buyer that will pay that exact price is not always very easy to come by, despite in a highbrow area. But if you are doing stocks or the fixed income space, you know when you are expecting this money, whether in terms of dividend payout or you make capital appreciation, you want to sell and pay your debt. It's 3 days time, you sell and you get your check. So always remember, real estate is not a very liquid investment. Now the last tree is a business tree. We call it the business tree. Business trees comes in different ways. It could be that you are an entrepreneur, but you are working. You call them the 10% entrepreneur. You invest a certain amount of your time into a business, either by investing or just by putting in your finance into those business or putting in your time into those business. So businesses are good, but business comes with its risks. So business, especially in a country like Nigeria, where we have policy somersault, policy comes and policy goes, you must be certain of the business you want to do. You must have knowledge of the business you want to do. You must know how long it takes to profit in those businesses. Because let me give you something. Let me give you a warning. In every business, there's a saying that for the first 5 years of every new business, you should not expect profit. And it has been proven that if a business can survive after 5 years, that means that business can stand the test of time. So when you are going into a business, you must not be thinking of the returns that you make in the immediate term. You must begin to think of the returns that you will make in the long term. And sometimes, what is the first benefit you get in business? You first of all look for a business that gives you turnover. Turnover is different from profit. After you build your turnover, you begin to look for profit. So in business, there are certain rules, there are certain things you need to do. And again, I sometimes it's funny when you see a young man leaves a job and he's starting a new business, and what he's thinking of is that, oh, I've just started my business, I want to get a shop, I want to get an office. Nobody will come to look for you in an office because people already have clients that they move to. So you need to add what I call value chain or value added services that others do not give for you to enjoy their patronage. And part of that might just be that you need to be going to their office, you need to be talking to them about your office, because people want to talk to you directly. That's not the time for you to have an office, because nobody will come to meet you in your office. So when you start business, the first thing you guard against, overhead. How can I reduce expenses? How can I grow my business without incurring so much expenses? Because in business, what kills a lot of business is the expenses that you incur, and where revenue is not commensurate to your expenses. So always look at a business, whether you are going into a business, look at the risks involved in this business, look at the opportunities in this business, and wait for that time and know the waiting period. There's a waiting period for every investment, whether you are doing the investment mountain, in financial investment mountain, or you are doing the real estate investment mountain, or you are doing the business invested mountain, which are called, we are growing a money tree. It comes with their challenges. Know their challenges, because even in a tree, there are rainy season, there are dry season. You know that during rainy season, you don't need to water the tree. You know that during dry season, you need to water the tree. So it's the same thing when you are building money trees. You must know when to go in. You must know the dry season of that business. You must know the dry season of that investment. You must know the dry season of that real estate business. Then you must know the rainy season. So your ability to know the seasons in a particular type of investment is the key to your financial freedom. Your ability to know when to invest is your key. Your ability to know when to exit is your key. Your ability to know when to buy that property is the key. Your ability to know when to sell that property is the key. Your ability to know when that business will strive is the key. Done. Because if you are able to do that, then you'll be able to build a money tree that may even outlive you and live for generations yet unborn. We have a lot of businesses that have done that. The founders of these businesses are gone, but these businesses is still generating income for their family, for members of their family, even up to the 4th generation. These trees are growing because they keep evolving, and the people that take it keep watering those trees. Any man can build a money tree. It all depends on how much time will you put into it.